So after you've determined the trend in the crypto markets, the next thing to do is to understand whether that trend will continue or it will reverse. And there's some indicators you can follow that can help you with this. The first one I want to get into is the relative strength index. Now, the relative strength index is a momentum oscillator. It basically measures the health of the market, specifically the health of the rally or the health of the sell-off. It's calculated on an index between 0 and 100. And between these numbers, there's some key readings. So a reading below 30 is considered oversold, and a reading above 70 is considered overbought. Now, let's get into a few charts to help us determine this. So what you're looking at here is a chart of Bitcoin versus the US dollar, and each candle represents 1 day of price. And this is on the Coinbase exchange. Now, I first want to point out that I've labeled the exponential moving averages, the 20-day and the 50-day. So when you look at the RSI, here it is below, you can see it bounces above this pink area. And now the pink area right here is calibrated to 70 and 30. So those are the key readings that I mentioned just a second ago. 70 means overbought, 30 is oversold. Now, one thing to know about the RSI is it just calculates what the market is doing, and when it doesn't follow the market, it offers actually a more powerful signal. And what this is called is divergence. So you want to look where there's a divergence between the RSI and the underlying asset. And in this case, I'll break this down. So if we're looking at a price trend that's going higher, and right here you have the 20-day above the 50-day, so things are great, things are bullish. And then you'll notice at this peak right here, the RSI hits a level above 90. Now, prices retreated and then went to a new high right here at about 20,000 of Bitcoin. And this is one of the most powerful signals we've seen in Bitcoin in the last few years. Even though the prices went higher than the prior peak, the RSI actually diverged. The price reading was lower than the previous price reading on the RSI. And what this tells me is that the trend is in trouble because there is not as much bullish sentiment as there was at the previous price high. And what happened after that? The price of Bitcoin dropped about 60%. So what you're looking at here is a chart of Ethereum versus the US dollar, and the time frame is different. So these are 240-minute candles, which represent about 4 hours. This is on the Coinbase exchange. Now, the same thing. In this case, the price of Ethereum was dropping, right? However, at this low right here, there was a divergence between the RSI. The RSI dropped to a reading of about 15, and then at this drop, which the price was lower, the RSI was actually slightly higher. So typically, when you're seeing a sell-off, you want to see lower readings on the RSI to know that that sell-off is going to continue. If the price or the point of the RSI diverges from the price, this is a signal that prices have typically bottomed out. And what we saw after this was the price of Ethereum went from about 570 all the way up to 900. Next, here's a chart of Bitcoin Cash versus the dollar, and this is charted on a 1-day time frame on the Bitfinex. Now, the exponential moving average, the 20 period, and the 50 period are labeled in green and blue. And now you'll see in this one is that you had a significant parabolic high in Bitcoin Cash. However, this RSI was lower than the previous one, which is actually a lower high. So the RSI actually went down as prices went up. So this is known as a bearish divergence. And this is telling you that prices likely will not continue higher because the RSI is not matching where the price is going. And in fact, the price of Bitcoin Cash dropped over the next couple of months. And it's also noticeable that these signals don't occur very often, but when they do, they give us places to put stop losses or sell orders. Next chart is XMR versus the US dollar. Now, this is a different cryptocurrency. This is Monero, which is an anonymous form of cryptocurrency. And this is a 1-day chart on the Kraken exchange. And in this case, we saw the price hit a new high above 440 in December with an RSI reading up above 90. And the next time the price went to break out above that high, it failed and the RSI was way lower. So this goes to show you that there wasn't as much bullish momentum during this rally as there was at this one. And what happened? The prices went on and dropped about 50% in the next month. So in this chart, you're not looking at the price of a cryptocurrency against a dollar. You're looking at the price of a cryptocurrency versus another crypto. And in this case, you've got Ethereum versus Bitcoin. Each of these candles represents 1 day in price moves, and this is on the Bittrex exchange. Now again, I've labeled the EMA 20 period and the EMA 50 period, with the orange being the 50 and the blue being the 20-day. And what you'll notice here is that the relationship between Ethereum and Bitcoin dropped here in mid-December. But that didn't coincide with a lower low in the RSI. You actually had a bullish divergence here. The RSI hit about 22 at this point on the drop right here in October. However, then in December, prices fell, but the RSI didn't follow. It bottomed at actually a higher low. And so this gave us a bullish divergence and led to a higher price climb over time. So there you have it. And just a reminder, no system or strategy is perfect, but the RSI is an indicator that gives us some sound levels where to buy and sell different cryptocurrencies.